Well, the good old government, and in this video, we're going to go through a cautionary tale of the government and stock market regulations. And let me first start off all this. I'm not here to bash on the government per se, because to be fair to them, I get it. Their intentions are good. They want to try to help. They are trying to help. So it's by no means am I trying to sit here and imply that and the government's evil. The government's doing this to screw people over. That's not what I'm saying at all. I fully admit, I guess I don't know this for sure, but in my opinion, the government's intentions were good here. They were they came from a place of we were trying to help. They came from a place of, you know what, we're going to control this situation for your betterment. And I get that. The intention was good. But that's the problem with intent. Just because intent is good does not actually mean it's going to help. And in fact, I would argue that this type of government regulation does more harm than good. And it really, especially when it comes to new people, right? I would assume that the regulation here that is put into place is to protect new people that maybe aren't quite prepared. But that's kind of the cruel irony is those are the exact people that actually really get smoked. And again, I'm not going to sit here and talk any longer. Just in theory, I want to show you, and what you're looking at on the screen is proof. And I realize for you statisticians out there, you can say, Clay, that's a sample size of one. That's one example. And that's actually a good point. I fully agree with you. But anybody that has enough experience, you know that what I'm about to talk about here, I'm not going to say it happens on every stock every day, but it definitely happens enough that you need to be aware. So if you're a beginner day trader, if you're just getting started in the stock market, these are the sorts of dynamics, this government regulation, you need to be made aware of. Now, a lot of people have heard of the pattern day trading rule regulation, and I would still probably argue that's number one regulation. That's just like, oh, I get it. You're trying to help, but you're just making life more difficult on the people you're trying to help. And the same exact situation here. So this other government regulation, trading halts. So what is a trading halt? It's just like you would think. A stock is trading and then it is halted, right? Can you think of, just the word halt just means stopped, meaning something is trading and then it stops trading literally in the middle of the day and it just stops. Now, why does it stop? Well, because it's getting very volatile. The price is flying all over the place. And again, the government is saying, well, this stock is getting way too volatile. So you know what? We're just going to stop trading right now. We're going to let everybody kind of figure out what's going on, and then we'll let trading start again. And the thing with trading halts is they can happen over and over again. So it's not like it just happens once in a day. No, it can happen over and over again. Now, I do realize, and I do agree with, to an extent, halting like an overall market. Like if the stock market as a whole is just going bonkers in either direction, I can see it halting and saying, all right, let's make sure that like the world, the country, the entire market is not overreacting in one direction or another. But those halts occur very, very, very rarely. We had one with the coronavirus when that was first going on, but I think the one previous to that, I guess don't quote me, but it had been years upon years before it ever happened. But I'm not talking about general market halts. I'm talking about individual stocks being halted. And why can that be so risky? Why can it be such a pain? And again, if you're a beginner and you're getting started, why do you need to be very aware of it? And here we have an example of that right here. So let's just go through, and this is ticker symbol GLSI. Again, I get it, just one stock, but there are many out there that have done things like this and that will halt. And the way it was working is you can see right here, maybe you're saying, wait, what's up with this chart, Clay? It looks kind of goofy. It does look goofy because of all these halts. So I want to look at it as two different situations. You have shorts and longs. Shorts, if you're a beginner, that just means people want to see the price go down. That's how they make money. So in other words, they lose money if it goes up. And then you have the longs. The longs are the traditional way, method, meaning you buy low, you sell high. So longs are buying and they want to see the price go up in order to make money. Or in other words, if they buy and the price goes down, they're going to be losing money. So let's first look at the shorts. Again, these are the people that want to see the price go down. And if it goes up, they lose money. So you could have had a short that shorted somewhere right around here. And then all of a sudden, the halt happens. So they shorted at the yellow arrow, and then right there, is where the halt actually happened. Now I want you to look at what happened. By the time they let this, the regulations let the stock start to trade again, it opened up there. So that may not look like a lot, but think about this. Right here at that area is right around, let's just call it $60. It then opened up at basically $67. So even if you were a short, meaning you want to see the price go down because if it goes up, you're losing money. Even if you wanted to be disciplined, there's nothing you could do. The best you could do is sell off $7 per share higher than where you wanted out. Again, because right there is at $60. So let's just say that you wanted to get out right there at $60, but again, it halted, meaning you were not able to get out until the stock started trading again up there at $67. A $7 per share. I mean, shorts got absolutely destroyed. And then look at it right there. Maybe somebody tried to short again. So right there, the price closed at, let's just call it, to keep the math easy, right around $79. So 79, again, maybe a short was like, okay, I need to just get out. I need to just get out. Because look at this thing. It's going crazy. A trading halt happened again. The stock stopped trading. It then opened up the next one up there at $90. That's an $11. So shorts that even if you were trying to be disciplined, even if you just weren't some like degenerate gambler that just doesn't really have a strategy, even if you did have a strategy and you got stuck in that halt, you're now looking at minimum $11 per share loss and you had no control over it. Like you didn't, you just, sorry. We stopped at 79, but then we started back up at 90. Yeah, shorts getting absolutely destroyed. And then you see that happen over and over. Look again. Maybe somebody tried to short out right there. Then it opened way up there. Maybe somebody tried to get out there. Then it opened way up there. Now, I could see you saying, well, Clay, those are the shorts like they deserve. Like betting profiting from a stock actually going down serves them right. Squeeze those shorts. And I understand that. But okay, here's the thing. Let's look at what then happened. So and this is where things actually get nasty because again, as beginners, as people new to the stock market, odds are they're not shorting. So I do understand the argument like, well, who cares if the shorts are getting destroyed? Those are usually more experienced traders anyways. They're not new. They're not beginners. So who really cares? I mean, they get what's coming to them for shorting a stock. I mean, I don't necessarily agree with that, but I do understand that perspective. But here's the problem. Longs, and in this situation, again, a long being somebody that buys low and sell high. So people that buy and want to see the stock go up, they got absolutely destroyed. Destroyed on this one. Let's go here. So let's just say, and let's actually give the long the benefit of the doubt. Let's say they nailed the bottom. So the price came all the way up here, started to roll back over, and so there's something like, okay, all right, yeah, I'm going to buy. It's pulling back. So they bought right here. At that area they bought, which was right around, let's just call it 129. So they bought at 129. And again, to be fair to them, they absolutely nailed the bottom. This one is pulling back, and they nailed the bottom. But then, guess what? Government regulation, the stock halted. Look where it opened up. Opened up all the way down here at $100. So that was, again, they bought at, nailed the bottom, 100. Or excuse me, not 100. Let's try that again. What'd I say? 129. And then it halted. By the time the price opened back up, meaning by the time the stock started to trade again, it was right there at, again, $100. Not to insult your intelligence, but that is out of their control. A $29 per share loss out of their control. Like I said, even if they were to bought right there and they said, you know what, I'm going to be disciplined. I'll set it, and I'm totally making this up. I'll set a stop loss $2 below where I got in so that they think their risk is $2 per share. Yeah, $2 per share, thanks to the government regulation, just morphed into $29 per share. But that's not all. Let's say again, all right, things get trading, and then let's say somebody comes down here and again buys the bottom right there at $90. And again, this is somebody disciplined. They're saying, you know what, I'm buying right there at 90. And maybe I'll put a stop loss in $3 lower. So I'm risking about $3 per share. Then look what happened. This next candle opened up all the way down there. So the trading was halted. And then when the trading resumed, opened back up, that candle opened up $45. And I'm not making this up. Pull up GLSI. This happened back in, when was this? Early December of 2020. Think about that. $45 is where it opened back up. That is a $45 per share loss out of people's control. Now, I'm well aware that you can sit here and say, well, Clay, if they would have held it, it bounced back up and they would have been okay. Yeah, the problem with that response is at the time, they don't know what's going to happen. They're already down $45 per share. So don't say like, well, if they would have held it, they would have been okay. Yes, you are totally trading in hindsight. And I assure you, we're all really good traders in hindsight. But think about that. Longs got absolutely crushed, came all the way down here. And then it did some, more of that the next day where the shorts, got screwed again and the longs got screwed again. And then things finally settled down enough where, they didn't need to halt it anymore. But I mean, that's trading halts. That's what can happen. This is why, there's nobody from the government watching this, but I would ask if there is, maybe reconsider halting individual stocks, because when you see examples like this, people were getting destroyed, absolutely destroyed, especially the people that were buying, right? Which is the traditional way. People buying stocks, hoping for them to go up, are the ones that, took the bear of this just monstrosity to the downside. So that is how trading halts work. Now, to be fair, are trading halts always this drastic? They're not always this drastic, but the core premise remains the same. The core premise being you lose control as a trader. You lose control as an investor. You may think your risk, again, assuming that you're trying to be a disciplined trader, trade with a trade plan. Your trade plan may say A, but because of a trade halt, it may turn out to be Z, and Z could be way different. Now, is it going to be that different? No, full disclosure, this is a pretty extreme case, but it can happen. So, the whole idea is, I get it, the intention is good. Let's protect people, but in protecting people, you're actually removing their ability to honor their trade plan, to be disciplined. You're removing all power from them. And as traders and investors, that's not a good thing. We want to be able to have the ability to make our own decisions. We want to be able to follow a trade plan the way we have it mapped out from the get-go. So just something to consider. It can be very risky. So if you notice a stock that's getting halted over and over again and you feel like it could be halted, then all I'm saying is just realize, and I know like a lot of people like to play halt strategies and stuff like that, and I'm not going to downplay those. But all I'll say is there is that risk because nothing is guaranteed. So all it takes is one of these situations and the halt and the stock opens up, not where you think it is. And it can hurt really, really bad. So just be very aware of trading halts if you're not aware. And, I don't know. If you're some sort of government official that happens to watch this and you have some sort of power, I don't know, just something to consider, because this is an example where in trying to protect people, a lot of people just got absolutely crushed. So that's all I have with trading halts. But yeah, be very aware of this government regulation. It can burn you really bad if you're not aware of it or if it catches you off guard. So always be searching the market for these sorts of situations so that you can, flat out avoid them so that it doesn't, these sorts of situations are account killers. I still can't get over that. $45 per share. That is crazy. Before I go though, real quick, if you enjoyed this video, then a couple quick things on my end. Please hit that like button. Also leave a comment below. Even if it's just a thumbs up emoji, little comments like that go a long way in letting me know you enjoy these types of videos and you would like for me to continue to make them. Then also check out the channel as a whole. There's a good variety of videos. So check those out and hopefully you decide to hit that red subscribe button, as I would love to have you as a subscriber to the channel. But yeah, be very aware of those trading halts, and government, let us trade. Let us honor our trade plans. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.